Welcome to this presentation of the three main components of a winning strategy. As Reed said, my name is Stephen Primo. I am the president and founder of Specialist Trading. And first and foremost, if you're not familiar with our website, we are an educational company. Even though we provide all of our members and students with strategies and techniques for trading, we are more about educating you so that you can ultimately put the power back in your own hands and make your own trading decisions. That's our philosophy behind Specialist Trading. Yes, I've been trading for nearly 4 decades. I started on the floor of the Pacific Stock Exchange. I made markets in roughly about 50 stocks. I traded through the crash of 1987 and the bull market that followed after that. And so I left the floor in the mid-90s to manage money and to trade my own account. So I have seen and traded just about everything out there imaginable, every market environment. I know what works in terms of consistency, and I know what doesn't. So all I do at Specialist Trading is basically teach and mentor all of my students the things that I currently use and that I have found to show a high level of consistency in trading. That's what it's all about. Now today I'm going to show you 3 main components that you can actually add to your current strategy, or you can build a strategy based off them, and I really feel you will elevate your odds for success. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results and a lot of charts in different markets and different time frames. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So we are required to show you this, and as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. You may want to copy that down. I post free information on a daily basis, anywhere from strategies, signals that our strategies have generated to just little tidbits of wisdom along the way. Although it is rather limited because of the way Twitter is set up, if you'd like more information and more detailed, a lot of educational webinars and videos, my sister site, which is Pro-Trader Strategies, I teamed up with them a while ago. They've put together a Facebook page. So you can simply log on to Facebook and protraderstrategies.com, and there's a lot of more informational videos about myself and about what we teach and different educational videos as well. Okay? So lots of ways to reach us, lots of ways to find out who we are and what we do. Now, as I stated, we are first and foremost an educational company. It's not our goal to simply trade for you the way a number of other sites do and tell you what to buy and what to sell. We really feel that that's the reason why most traders fail, is because you're relying on someone or something else to tell you what to do. It's our belief that most traders have to make their own trading decisions in order to become consistent. The only trouble is that they don't know where to find this consistent information. So that's what we do at Specialist Trading. We provide you with all these tips and techniques and strategies that have stood the test of time. And then we mentor you along the way so that you can ultimately mix and match to make it fit your trading style, and then you'll feel comfortable trading something that is fit to your means, not something that you're trading that someone else does very well with, but you just can't seem to make ends meet. I know a lot of traders go through that, myself included. When I first started, my first couple of years were tremendously difficult, so I know what a lot of you are going through. My mentors who were traders on the floor were able to turn my trading around, and that's what's enabled me to become consistent for nearly 40 years now. So this is what I do. I teach and mentor all of my students on how to trade with the specialist edge. This is the same edge that turned my trading around, and this is what we do with Specialist Trading. Now I have a lot of different slides and a lot of different things to show you today. I'm going to show you how simple trading is and how simple it is to become consistent. And so if you bear with me, I have a lot of different examples to show you. I'll take the questions at the end so that we don't slow down today's presentation. So since this is a classroom, here's what you're going to learn today. The first component is how to trade in sync. Everyone knows they should trade in sync, but if this were so simple, then why do most traders fail? I'm going to show you a very simple but powerful way to be in sync with any market and any time frame. Component number 2, I'm going to share with you a specific price bar pattern that you should be looking for, regardless of what technique or market you trade. And then lastly, I'll show you an entry technique. All right, this will really fine-tune your entries and increase your odds for success. Remember, you can add any or all of these to your current trading, and I really feel they will increase your odds for consistency. All right, let's start out with component number 1. It's basically trading 101. You must trade in sync with the trend. Once again, everyone knows this. It's probably the first thing you learned when you started trading. But if it were so simple and so easy, then why do most traders fail? It's our opinion that the reason why most traders can't be in sync with the trend is because there's a million and one ways to find out what the trend is. I mean, think about it. Every educator, every webinar you go to has a different idea of how to find out what the trend is. Let me give an example here with this generic chart. As we look at this, someone would say, well, Steve, there is no trend. We're just basically going lower, then right back up again, and we're basically just in a trending, I should say sideways market, non-trending market, and there's no real way to discern. So I've always been taught to stay out of rangy markets because that's how you lose money. So I won't do anything here, okay? And this is the way most people trade, but not according to what we teach at Specialist Trading. The way you find out what the trend is, the overall trend, is to simply add one tool, and it's free. You can have it on virtually any charting software package. It's a 50-period moving average. But you have to ask yourself, where is price in relation to that 50-period moving average line? Okay? In this case, it's above. So if the majority of price is above, then the overall trend is up, and you're going to be looking for buy setups only. That's it. That's how simple it is. Okay? Now, conversely, someone could look at this chart pattern and say, well, once again, no trend here, Steve. I'm not going to do anything because we're just basically going down and back up. It's a whipsaw market. No, that's not the way you find out what the overall trend is. You simply add the 50-period moving average. You ask yourself where the majority of price is in relation to that. Obviously, we're below the 50, so the overall trend is down. Therefore, you will only be looking for sell setups. I know this sounds extraordinarily simple. I know I couldn't believe it when I first heard about it nearly 40 years ago. But go back and look at your charts. Go back and look at your last 10, 20 trades. I can almost guarantee you why the reason why you had losing trades was because you were buying below the 50 period and selling above. So it doesn't matter what strategy or technique you trade. Just apply the 50-period moving average and be in sync with that. Okay, component number 2. Now that we know the overall trend, we want to look for bars that close either in the top or bottom 25% of their range. All right, so what exactly does that mean? Well, take this bar right here, all right? And it wouldn't matter if we were looking at a candlestick or a standard open, high, low close as we're looking at right now. And it doesn't matter if this were a monthly bar or a 5-minute bar. It absolutely makes no difference. But what you want to do is simply divide it by 4 separate but equal parts. And if you close in the top quarter, and if you are above the 50-period moving average, well, then that's an indication to buy. The market is telling you that most likely it's going to continue to go higher. Now, conversely, if we look at this chart here, we are above the 50-period moving average, and these are all the bars that closed in the top 25%. Now, let's look at this bar right here, okay? It closed at the very low. Very simple. You just divide the bar by 4. And this is something that, you may say, well, Steve, I trade tick charts. This is too difficult to do in the heat of the moment. I understand that, but after a little practice, you'll be able to see this in 2 milliseconds. It doesn't take much practice to see where it closes. And if you are below the 50-period moving average and you close in that bottom 1/4%, the market, not in a chat room or a trading room, but the market, the only thing you really should be listening to is telling you that most likely this is an indication to sell, and we will be continuing lower. Once again, it would not matter if this were a tick chart, a hourly chart, or a monthly bar. It makes absolutely no difference. If we look at this chart here below the 50-period moving average, here's the bar that closes in its bottom quarter of its range. Remember, it doesn't make a difference if we're looking at candlesticks or open, high, low, close. You simply take the extreme high or the high of the wick and the extreme low and the bottom of the wick and divide by 4. That's what range is. Range is not open to close. Range is top of the wick to bottom of the wick. All right, now let's go to component number 3, which is an entry technique. Enter upon the confirmation of trend. So what exactly does that mean? What is the confirmation of trend? I thought we knew what the overall trend was. Well, here's the confirmation method. We're going to buy if price trades 1 to 5 ticks above the bar that closed in the top quarter of its range. This is telling us that we are most likely resuming our upward trend. All right, so we look at this example here, this generic example. These are the 3 bars in green that closed in the top quarter of their range. And as we can see here, We want to buy if we trade above here, but we didn't trade there on the next bar. Usually we want to do this on the very next bar, okay? But we didn't do it, so there's no setup there. But as we see here, we have another setup. So we traded above there. You notice we didn't close above there. We just traded, and the market went up for the next 5 bars, okay, as we can see. Now, not a lot, but for all we know, these are monthly bars, and you just had 5 or 6 months of up market. Now, here we have another example, and here's where you want to buy if we trade above there. And yes, it did. So you would have entered on this next bar. Remember, it absolutely makes no difference where it closes. All we're concerned about is that it traded above intra-bar on the next bar, and this one worked out a little nicer, okay? And you see how this is all done without the aid of any news events, without the aid of tons of indicators, without looking at, having to listen to some trading guru either in a chat room or on TV. You can do this yourself, and you can apply this to your current trading method if you like. Now, if we want to go short, if we're selling, well, we just do the opposite. Sell if price trades 1 to 5 ticks below the bar that closed in the bottom 25% of its range. So here's the bar that closed in the bottom 25% of its range. We're going to go short if we trade there on the next bar. And as you can see, we did trade there, intra-bar. We didn't close there, but it makes no difference where we close. And that's our entry point to sell, and look what happens. Once again, everything you need to know comes from the chart in front of you. You know, you're not going to get that from anything outside source of telling you what to do or what it thinks the market to do. It's going to, because these are all just opinions and these are all just people's ideas. But just learn how to listen to the market, and trading becomes much simpler. Now, we put all of these 3 components together to make one of our most consistent strategies as specialist trading. This is strategy number 4. This is something that the basic format was taught to me on the floor, and when we first started trading this on the floor, I would use this to be in and out of the market in roughly 5 minutes. You can still do that with this. It's designed to get you in and out rather quickly, but basically we teach you ways in the courses on how to stay in longer if you'd like. Now let's start looking at some stock examples, because once again I'm going to go through every market and every time frame to show you how well this works, this strategy, which encompasses the 3 components I just revealed to you. All right, so we look at this chart here of CVX at the first or second week of April. Once again, someone looking at this would say, well, Steve, no clear-cut direction of trend here, so I'm not going to do anything in this particular stock. Once again, this is the way most traders find out what the trend is, and this is the way most traders trade. We don't trade that way. The only thing we want to do is see where price is in relation to the 50-period moving average. And as you can see, price is above, so the overall trend is up. If the overall trend is up, are we going to be a seller? No, we're only going to be looking for buy setups, regardless of what strategy we trade. So automatically, in our opinion, we've automatically just eliminated half of our losses because we're on the right side. Okay? So now we look for this bar that closed in the top quarter of its percent of its range, okay, right there. And we're above the 50-period moving average. And it meets the remaining 3 rules of strategy number 4, which I'm sorry I can't divulge right now, but I've given you half of the rules. I've given you the first 3. The remaining 3 are for the students in the course. So this was an automatic signal that was generated, a buy signal generated on the 6th of April. So we were going to buy if we traded above, and we can see on the next bar we did trade above. So there was our entry, and it gained 9 points in 3 weeks. Once again, we don't look at news. We don't care about looking at tons of indicators or what's happening in a trading room. We just want to see what the stock is telling us what it wants to do. How about Apple? This is an older chart of Apple going to the beginning of the year. Someone looking at this would say, well, Steve, there's a lot of support here. We've had a sell-off, but I think there's major support. All the volume lines up and all the institutions are buying at this level, so I think I'm going to buy once we get down to that support level again. Okay? That's not the way we trade at specialist trading. The only thing we look at is the 50-period moving average. Where is price in relation to the 50? We're below. So we knew automatically we're not going to buy anything in Apple. We don't care what earnings come out. We don't care what people say. We're just going to look to sell. And if we look here, here's a bar that closes in the bottom quarter of its range. It meets all the other remaining rules of the strategy, so the software automatically generated a sell signal on the last day of the year last year. We had to simply wait for it to trade below that bar, though. We can't just sell at the market. We have to wait for confirmation. As we can see, it did, so we got short the very next day, and the stock went down 14 points in 1 month. All right, this was at the beginning of the year. How about GNW? Now, this is a very inexpensive price stock, but I show you this specifically just to share with you that it works in all types of stocks, whether it's a $100 stock or a $2 stock. Once again, we are above the 50-period moving average. We have a bar right here at the bottom that closes in its top 25% of its range. So the software generated a buy signal on the 12th of April. Okay, all the remaining rules of the strategy are met. So even though this is just a $2.50 stock, you would have entered the next day if we traded above, and we did, and it gained 1.5 points in 3 weeks, or 50% in 3 weeks. Now that's just a $2 stock. If we wanted to go higher, we could apply options to LinkedIn. Now, it was below its 50-period moving average, as you see. So even though it's going sideways here in this 1 or 2 weeks of data, we knew that it's a sell. We wouldn't buy anything unless we had consistent closes above the 50-period moving average. And guess what? We have a bar that closes in the bottom 25% of its range. So our software generated a sell signal once again on the 30th, and we had to go short only if we traded below this, which we did on the very next day, and 120 points in 2 months. Now obviously, there was some news or something that came out where the stock gapped down from roughly 190 all the way down to par. But no one told us that, a month in advance. We just knew that if price is below the 50-period moving average, the overall trend is down. And so that's all we were looking at. You see how we add consistency by adding these simple rules and putting the power back in our hands. We don't have to pay for a service. We don't have to pay a monthly fee to go to some room. We just can do it all on our own. It's a lot more inexpensive, and you feel a lot more empowered with your trading. Now, this can also work for ETFs. Here's IWM right here. This is going back to March. We're above the 50-period moving average. We have a buy signal that was generated by the software. We closed in the very top, but we can't go long until we trade above here. And we did on the next day, and the ETF for the Russell 2000 went up 8 points in 1 month. Okay, so you could have used this as a market directional tool. You could also apply this to the QQQs. This was on the 2nd of February. We're below the 50-period moving average, so we're only going to be selling the QQQs, meaning that the market overall trend is lower. And here's our setup bar. We went short the next day, and 8 points in 1 week. Okay. Remember, you don't have to trade the stocks. You don't have to trade these. You can simply purchase options, directional calls, directional puts if you'd like. We have many students who do that. Or you could have some option strategy. Let's transfer over to an entirely different market. Let's look at the E-mini S&P. And I want to show you this intentionally. This is an older chart going back to last August of 2015. But I'm showing you this to, remember, we talk about consistency. I'm not going to sit here and tell you that these 3 components work amazingly and will always generate thousands and thousands of %. We do have losses from time to time. Remember, consistency just means 2 steps forward, 1 step back. So from time to time, that 1 step back will be a small minor loss. The beauty of our techniques and our methods, things that I've accumulated in nearly 40 years, is that they are very robust, and if you do have a small loss from time to time, usually you'll be able to make it back rather quickly. So let me show you this example here in the E-mini on a daily chart. This is going back to August of last year. And as we can see, this is a little bit more advanced because we're oscillating above and below. So when you see markets like this, all that is required is that you meet all the rules of the strategy, but even though the majority of bars aren't on one side, as long as your entry is in sync with that setup, that's okay. So this generated a buy setup. Even though some bars here closed below, our buy entry is above the 50. So being a little bit more aggressive, it's still a valid signal. So we would have entered the next day, and look what happened. It went straight down, and most likely you would have been stopped out with a minor loss, okay? So it doesn't work all the time. Sometimes the market is just kind of going sideways or whipsaw, and most strategies or techniques won't work in markets like this. But if we had waited a week or two, towards the middle to latter part of August, we see that we closed below the 50 period, we closed in the bottom 25%, and our software automatically generated another sell signal. This was on the 19th of August of last year. But just like stocks, we can't go short until we trade 1 or 2 ticks below, and it has to be on the next bar. So as we see here, the very next day we traded below, so you got short. Now you're hoping that you're going to make back the losses, and right away you would have probably made back everything on that first day. But if you had held just a couple more days later, that's 230 points in 3 days. Okay? Now, we're not saying all of our students held out, but the majority of our students who took this signal had a nice gain that would have made back the previous signal's loss. So that's the beauty of our methods. Although we don't promise that everyone is going to be a winner, they have an extremely high level of consistency so that if you do run into a string of small losses, you'll be able to make them back usually rather quickly. All right, so let's go to a more moderate time frame. This is an hourly time frame going back to the 12th of last month, just about a month ago in April. Once again, a little bit more aggressive because we're oscillating above and below the 50-period moving average. But this bar closes above the 50, as you can see, and it closed in its top 25%. So it met all of the remaining rules of the strategy, okay, and the software generated a buy signal. This was on the 12th. So we were going long on the next hourly chart if we traded 1 or 2 ticks above, which we did. And if you held on for the next week, well, that's 50 points or $2,500 per contract. Once again, we had no idea the market was going to take off on an hourly basis. The only thing we listened to is just the chart in front of us. We don't have to look at multiple time frames, multiple indicators, multiple news events. The market, if you listen learn how to listen to the market itself, you don't need all of that. Okay? And the beauty of these techniques is if you happen to miss that first signal, which gives you the best bang for your buck, if it's a strong trend, it will generally produce more and more signals. So about 4 more signals were generated later on in the week that could have got you back in. Now let's see what happened this week, just to show you that we're not cherry picking things that happened 4 months ago. This happened just, I believe it was Tuesday or Monday and Tuesday, I believe, of this week. This was on the 10th, if you see here in the lower left-hand corner, going into the 11th. All right, this is a 5-minute chart of the E-mini, and as we can see, the first part of the chart we are above. So this is telling us on this 5-minute time frame we're only going to be buyers. So if we add the same rules I just shared with you along with the 3 remaining rules of the strategy, these were all the buy signals that were generated on the 10th. That's Tuesday of this past week. So had you taken the very first signal here, that's 10 points to the upside you had to work with. Okay? Now, had you exited on the day, because most intraday traders are in and out that day. Now, the next day we opened below the 50. We oscillated a little above, but for all intents and purposes, the majority of the day was below. So looking in hindsight, someone could say, well, yeah, it's easy to know we were in a downtrend. Well, no, if you add the 50-period moving average, you're going to know while it's happening if you were in an overall uptrend or overall downtrend. And so the software automatically generated sell signals. Remember, if we are below the 50, the odds are in your favor only to be going short, regardless of what strategy you want to trade. Okay? I'm not saying that you have to trade these. You can trade anything. If we're above the 50 period, it's in your best interest only to be looking for long setups. Over time, just like the slot machines, if you do the opposite in Vegas, they give you these false, senses of security, thinking that you're making money. But over time, you'll see that if you play the slot machines long enough, you're not going to make any money. It's the same way with just trading blindly and not using this rule, okay? If you use this rule, you will have that consistency. Sure, you'll have, small minor losses from time to time, the way we showed you, but over time, it's about consistency so that you can be trading 20, 30, 40 years down the road. And lastly, the Forex markets. We're not going to leave those out. Here is a weekly chart of the Canadian dollar going back to last year, last May. All right, as you can see, we are above the 50, so nothing changes just because we're looking at a weekly chart. And the market has been coming straight down. Someone could say, well, why would you want to buy this? We're really in a free fall. The technicals look terrible. Also, there's a lot of terrible economic news and fundamental news. Once again, don't concern yourselves with those things. All right? There's no consistency in that way of trading. Only look at the chart in front of you. The main thing is you have to learn what to look for, and this is what we teach you in our courses. So as we see here, we closed in the top 25%. We're above the 50, and we've met all of the other rules of the strategy. So we have generated a buy signal right here coming into May, into June. But just like the other rules, we cannot buy until we trade above it on the next week, which we did. So we're long now coming into June of last year, and it went up 1,100 pips, or roughly $11,000 coming into the end of the year, okay? Once again, we're just showing you the consistency in these methods. There's no reason to pay exorbitant amount of fees, monthly fees, to be in some subscription service telling you what to do. We want to put the power back in your hands so that you can make your own trading decisions. Okay, so let's recap before we can go to any questions and answers. And remember, here's what you learned today. Since we are an educational company, we're all about teaching you something. Trading in sync, probably the most important thing, first thing that everyone learns, but if everyone knows this, and why the majority of traders fail, upwards of 80 to 85%, it's because everyone has a different idea of what it means to trade in sync. The easiest, the simplest, and the most powerful way of being in sync with the overall trend is what my mentors taught me. Just apply 50-period moving average. If price is above, you'll only be looking for buy setups, regardless of what technique you're using. If price is below, you'll be looking for sell setups, regardless of what method you're using. Secondly, once you know the overall trend, look for a price bar pattern. If you're above the 50, look for a price bar that closes in the top quarter of its range. This is an indication, not coming from Trading Guru on TV or in a webinar, but an indication coming from the market itself, telling you most likely it's going to go higher. What a great edge to have, you know. If you're going to have an edge, you want it to come from the market, the source you're trading, right? Now, conversely, if you are below the 50-period moving average or close below and you close in the bottom 25% of the range of that bar, okay, that's an indication that you're most likely going to be going lower. Another edge coming from the market itself. Now, lastly, you can apply this entry technique to any method you have. Whatever you decide, what bar you decide to go long, simply don't buy at the market or place a limit, because you don't know, you still have no idea whether it's going to work out or not. Wait for it to be confirmed that it's going in your direction. The way you do that is whatever bar that tells you to go long, don't simply buy, wait for it to trade above the high of that bar. Once that bar closes, wait for it to trade 1 or 2 or 5 ticks above. It's up to you. That's your entry point. Sure, you're not going to buy at the bottom, you're not going to get the best price, but trust me, over time it's about consistency. So many times traders get a buy signal, they buy at the market, and then the stock, the future, whatever you're trading goes straight down. Okay? If you had only waited for this, you wouldn't have got into the trade at all, and you would have saved a lot of money in losses. Okay? You can just reverse this if you're going short. Now, before we go to questions and answers, I want you to ask yourself, I'd like to ask you a question. Do you think any edges that I've just shared with you today, any of these components could have helped your trading this past year? Okay, and be honest. Even if I know that you say, well, Steve, this is not my cup of tea, I have to look at news, that's the way I was trained, I can't let go of that, or I have to look at certain indicators, or I have to go to a chat room. Okay, I understand that. We're not here to tell anybody that the way they're trading is wrong, but if you added one thing, let's say you added the 50-period moving average technique I just shared with you, don't you think that could have increased your odds for success this past year? In fact, I dare you to go back and look at your last 10, 20 trades. I can almost guarantee you that the reason why you lost or had losing trades was because you were out of sync with the 50-period moving average. Now, what if I give you 3, 4, 5 more techniques, such as the one I just shared with you today, entirely different techniques to increase your odds for success, but entirely different types of edges? Well, if I could just take the last couple of seconds of the presentation here to talk about our special attendee discount. This is what we have for you today, and because of our affiliation with Investors Inspiration, we have a great offer for you. This is our Secrets of a Stock Exchange Specialist training sessions. About 3 years ago, I was asked to be the head speaker at a conference in Colorado, and they videotaped and recorded the entire presentation. Okay, I spoke for 3 hours, and I talked about many more high probability trading edges, such as the one I just shared with you today. But I think probably more importantly included in this is that I gave the full rules to one of our best pullback strategies, a strategy which is entirely different from the technique and idea I share with you today. This is strategy number 1, probably our most consistent pullback strategy to date. In fact, let me share with you some of the recent signals that were generated for our strategy number 1 course members. This was just on the 6th, just last week. If you can see here, IFF looks as if it's going lower, and someone would say, well, it looks like we're in a clear-cut downtrend, Steve, but the strategy, which is very simple, once again, only uses 2 indicators and is basically looking for a specific pattern. Once again, not relying on news or tons of information, which we teach you all the rules. It surmised that we were simply in a pullback in an overall uptrend. So it generated a buy signal on the 6th for all of our members, and the stock went up 10 points in the next 2 days after that. Now conversely, you can use it to go short. This was in April, PRGO. It looked as if it was possibly making some type of bottom here. There was nice support, but strategy number 1 generated a sell signal on the 20th. Well, this was a great signal that a lot of our members got into, because look what happened to the stock in the next couple of weeks. Went down 35 points. Once again, obviously there was some news or something that came out that caused this stock to gap down tremendously. We have no idea. We tell our students there's no need to look at news. Everything you need to know comes from the chart in front of you. So it wasn't as if the company called us up and said, hey Steve, you might want to tell all of your members to go short, because we're going to make a major announcement where the stock's going to drop about 35 points. Okay, we didn't know that. We just saw from the chart and from a few simple rules and indicators telling us to sell PRGO. And you can use this for the E-mini futures markets. This is from this past week as well. This is on the 9th and 10th. This is on Monday. As you can see here, we had a nice sell-off 10-minute chart. Most people would have thought that this was a sell-off. The market was topping out, but we generated a buy signal. And we had a nice, very conservative bounce up. Now, towards the end of the day, another sell-off occurred. And if you were lucky enough to hold the position overnight, another buy signal was generated in the last roughly 20 minutes of the day. And the next day, the E-mini went up 25 points. We can also apply this to currency pairs. It looks like the dollar-yen in this chart here coming into April was going straight up, but strategy number 1 deemed that we were just rising in a downward overall trend, and this was just a pullback to the upside, and it generated a sell signal on the 28th of March, and we went immediately down 500 pips, or roughly $5,000 per contract in the next couple of weeks. There was a short bounce, and people were thinking, well, it looks like as if we've bottomed out. Now time to get long the dollar-yen. Nope. We generated another sell signal on the 25th, just a couple of weeks ago, and we went down another 450 pips. So what we're going to be offering in this Secrets of a Stock Exchange 3-hour video seminar are the complete rules, entries, exits, stop placements, advanced entries, advanced exits, a conservative approach, aggressive approach to trading this. It's all included in 3 hours of this video, as well as many more edges, such as the one I just shared with you today. Now, ProTrader Strategies is my sister site. They market and promote all of my courses, and they have this on their website advertised for close to $1,000. But because of our association with Investors Inspiration and for all of our attendees today, we are drastically reducing this to $37, okay? You can get all of this information plus all of the rules to strategy number 1, which many of our course members have spent hundreds of dollars for only $37. So this is for a limited time only. This is not going to last for the next couple of weeks or even more than 2 or 3 days. I believe this is only just for coming into Monday, and then that's it. So if you're interested in taking advantage of all this information, and remember, we're an educational company. What comes with this, just because you're paying $37 doesn't mean we're sending you the link and then saying good luck. You also get lifetime correspondence with this. So I will be your personal mentor. Anything else you may be trading. So you're going to get, along with that, nearly 40 years of experience as your personal mentor, all for $37. I don't even think you can go out to dinner for less than $100 these days. So I would really take advantage of this before it goes back to up to nearly $1,000. Okay, here's how to take advantage of this. Once again, ProTrader Strategies handles all the courses. You can email them at the email address there, trading@protraderstrategies.com. You can call them directly at area code 310-598-6677. Or if you're interested in just going directly to the sign-up page, there is the link right there. The only trouble is that is not a live link. You have to copy and paste that onto a browser. But I believe they're going to post that on the chat box. So if you'd like to, you can go to the chat box and it'll be posted there in just a little bit. But if you're not able to, just simply call up ProTrader Strategies or email them, say you want that $37 deal, and they will be happy to send you the link directly to that great offer we have, okay? I have just a few minutes here for questions, so just let me open up the question and answer box. And I want to thank you all for taking the time to hold off on any questions. I'll try to see. Terry ask, where do you place the stops? Well, Terry, that's taught in the courses. You know, I can't. What I did today was I gave you a free appetizer, but it wouldn't be fair to people that paid for the entire meal to give out an entire free meal there. So I teach all these stop placement, different stop placements, all the advanced exits, different types of entries in the course. So for $37, you can't go wrong with that. Okay. Let's see. Let's see, how do you set your close stop? Well, once again, that's in the course. And some people have come to my website. I see here, yes, we're in the process of moving the website to a different host. So you may see some problems there on the specialist trading. I would suggest going to Pro Trader Strategies. There's the same information provided there. In fact, more detailed information as well. What is the best time frame for trading, in my opinion? Well, you know, once again, Jose, I always say that the best time frame is the one that makes you feel the most comfortable. As I stated, remember, we're an educational company. It goes against our philosophy to tell people, you know, this is the one perfect way to trade. Just trade this system or this strategy and you will be successful. Because we don't believe in that. We believe that everyone has their own temperament. Everyone comes with their own risk, you know, parameters. And so, you know, I learned this lesson a long time ago. When I first left the floor in the mid-90s, I had a number of students that wanted to train with me, and I just did this as a hobby. So I taught about 5 students. I taught them exactly the way I trade, the time frame. And after 2 or 3 weeks of sitting with me, then they went on their own, and I would say the majority of them got entirely different results. Some people made more money, some people lost more money, and I couldn't understand why, because they had the same rules, and it was that everyone comes to the plate, you know, with different, you know, parameters. Some people were afraid to pull the trigger. They couldn't trade that time frame. They couldn't trade that market. Whereas others wanted more action, so they would double up their positions. They would stay in longer. So I learned the great truth of trading is that everyone has to trade their own way. So what we provide you with is the tools and the information that has stood the test of time, but then we mix and mold it to meet your needs. So there is no one perfect time frame. We have students that trade what I just shared with you today, and they swear by using a 5-minute time frame, whereas others say, oh no, this works the best on a daily time frame. And others may say, oh no, this works the best in this market. And the only right answer is what works best for you. That's the only thing that matters. So I can't tell you what the best time frame, because it gets consistent results in virtually any time frame and in any market. That's why I showed you all of these different examples. Okay. Let's see. Johnny asks, let's see, do you need to buy expensive software to find the candlestick charts that much? Well, no. I mean, to find candlestick charts, I don't believe you need to buy. You know, candlestick charts are just about in any charting software package. So I'm not sure exactly what you mean by that. And remember, our methods can be applied whether you're using candlestick, whether you're using open, high, low, close. It absolutely makes no difference. But in terms of using candlesticks, it absolutely makes you know, that's pretty much free on any charting software package. I would contact your tech support department. William says $37 course, only one strategy is covered. Yes, only one. Yeah, but for $37, wow, you know, there's some strategies that cost thousands and thousands of dollars on different websites. We're giving you a great strategy that usually costs hundreds of dollars for $37 only, plus all of the other information provided, many more trading edges and techniques to enhance your trading. So it's 3 hours jam-packed with information that hopefully will really elevate your trading. Okay. Let's see, can you ensure to post the link with the discount? Yeah, you know, I don't have the capability to post it right now in the chat box, but all you have to do is simply copy that link at the very bottom there, because since we don't have a live link, just copy that link, excuse me, and post it onto a browser. Excuse me. Paste it onto a browser, and it'll take you right there. If you're having difficulty, you know, just call or email Pro Trader Strategies. There's no you know, requirement. There's nothing that you have to, you know, pay for. You can ask them for information, but that $37 deal is only going to go for the next couple of days. Okay. Jose asked, do you get the software as well? No, it doesn't really. You know, the $37 deal does not come with software. For an extra price, I believe you can purchase that, but you have to talk to Pro Trader Strategies. But trust me, it's a very simple strategy. You won't need it, and we don't want you to rely on, a software, because basically once you start doing that, it's just once again relying on someone telling you what to do, or even though in this case it's an indicator telling you what to do. My goal is to teach you. I want you to be able to spot these on your own. I don't use the software. I just simply know when a signal is generated, and I want all of my students to get to that point, because there may come some day where you're not at your computer, you're not at software, and you just want to look at a standard generic chart. You're going to know whether a signal is generated or not. And that's the best way to trade, when you have them. Complete faith and power in your method, and you're in charge of your decisions. That's our only goal, okay? Let me see here. Remember, call up, and a lot of people are asking, is this something I get mailed to me? Is this a video? Is this, no, it's not. What it is a link to an online recording. Another thing people are asking is, does this expire in 2 weeks? In other words, do I get to watch it for a couple of weeks, then it expires? No, it's yours for life. For $37, you're getting this. You can watch it in your lunch break, at the your leisure time, whenever you like, on the weekends, and it's always going to be yours. Plus, you're always going to have lifetime correspondence with me, okay? So in conclusion, I want to thank you all so much. I believe if you look up on the chat box, they possibly put up the link right there. You can go there and copy and paste that, and it'll be on there for you. And thank Reed for posting that for me. It's up there for all the audience. Remember, once again, here's the information. If you are unable to reach it, just contact Pro Trader Strategies. It should be there, and they'll be able to answer any question. There's nothing that you have to agree to. You can ask questions, and it's up to you. But that $37 deal will not be going on for much longer, okay? I want to thank you all so much for attending. I want to thank Reed for inviting me to speak at Investors Inspiration, and thank you for taking time out of your Saturday, okay? I wish you all the best of luck trading, and I look forward to all of you becoming members and students of my courses, okay? Thank you so much.